Okay, I think repetition is the mother of all learning, so I'm going to do a real quick roll trade just for training purposes. All right, rolling. Here's my XLU position. Okay, original position. I'm going to open it up. I did a golden gecko. All right, I sold the September 20th call, 43 call, which is a bet, right? I sold it. So I'm betting that XLU will stay below 43 by the September 20th expiration date. It's currently trading at I'm sorry. Hello. I bet I sold this. Yeah, September 43 call, which is what I'm betting that XOU will stay below $43 by the end of December 20th expiration date. As you can see now, it's above $43.28. So I sold the 43 strike and I bought the further out 46. Right. So how much did I collect? Well, I collected $14 on the sold side and I bought $2, so I collected $12. Right? On the put side, I sold the 38 put, which is what I'm betting that XLU will stay above 38 by the end of the expiration on September 20th. Well, of course, it's way above that, correct? I sold it for 33 cents or 33 bucks. I bought the further out of the money wing for $9, so the difference is what I collected on both sides. So, look, my probability of profit is 51%. My call side is getting tested. I have 21 days left. I still got time. I'm going to hold it. I'm going to keep this call side, but I'm going to roll the untested side up. So I'm going to click here. What I mean by up is I'm going to roll it up closer to where the stock is trading now, and I'm going to keep the same expiration date just for keep it simple, 21 days. So I'm going to highlight these two. I'm going to click roll. Here's what happens. Okay. Here's where we are now. I'll scroll this way. Okay, so look. Okay. This let me close this again. Okay, so let's recall. I had the 38 put. I'm gonna roll this 38.35 put, right? So I'm rolling it up higher. So highlight that. So look, click roll. Here's the one. Here's my position now. Correct? So what I want to do is I want to roll it up higher. Okay. So, oh, and here's the look. The expiration date is 28 days on the roll. Currently, it's 21 days. Let's say I want to keep that same expiration, the original expiration date. All I do is go up here and click the minus sign. I'm going to reduce it so it matches. See, everything matches, right? All right. Now I'm going to roll the put side. I don't know if I can zoom out. Okay, here's where the XOU is now. Here's my current position. I want to roll it up. See, look, here's the 1 standard deviation line. I might as well roll this sucker all the way up here to 1 standard deviation. So, and roll this out up to the 2 standard deviation roughly, right? Okay. So the 41.5 put. Let's see what the probabilities are. Click leg. Look. I have an 89% chance of it staying above $41.50 at the end of 21 days. Okay, and I'm going to collect 5 cents. All right, so at least I'm rolling up for a profit. If I want to be a little bit more aggressive, I can roll it up higher and collect more. Collect 11 cents. I still have a 81%, so I think this is what I'm going to do. Okay, I'm just gonna roll up the the untested side, collect a little bit more money, right? And I'm gonna keep. See, I'll scroll here. I'll grab it. Here's my call. My call is right here, right? The stock is here. My call I sold is right here. All right. So I want to collect a little bit of money, and I'm hoping this will drop down, below 43. All right, and then I'll close out the trade for a profit. So this is really aggressive. Okay, I'm rolling it up, I'm rolling it up really close, 80%. So that's what I'm gonna do. You don't have to do the same thing, but you can do like watch. I could make it further out instead of 21 days. What if I make my expiration and I skip all? Let's say I skip all the weeklies and I go to the first regular out of the money option 49 days from now. And if you look, I'll move this down to the 1 standard deviation line like this, or I can just go strikes 1 down that way. I can collect 13 cents. See, it's really not that much more. I can move it up, maybe collect 33 cents. Here's an option you could do. Not very liquid, which is why the liquid drops are there. Okay, so I think I'm going to go back and just do my original, get back down to 21 days, and let's just be a little aggressive. I'm just going to do it like this, do it like this. I'm going to collect at least 11 cents. Why? Because this cost me $3. I'm going to keep the dream alive, and this is basically a teaching trade here. So I'm going to hit review and send, and this will go in for Monday. The market's closed, so this is going to go in for Tuesday. I can always cancel it in between. But now I wanted to show you, the rolling on the put side. Now let's see what happens if I do the tested side. Let me place this order in real quick. Boom, send order in. Okay, close this. Now look at the call side. Okay, I'm going to unselect this. What if I want to roll the call side? This is the side that's getting tested, right? Because I bet it will be below $43 by the September 20th expiration. And look, it's a little bit above, right? It's 28 cents above. But I got a little margin of safety. Why? I sold it for 14 bucks. I collected 12 cents. So $43.12. So I'm a little bit over my break even. All right, so let's roll it. And let me show you why it's hard sometimes. Okay, see, I'm going to reduce this expiration down to 21 days for it to match. Right? There you go. See, same expiration date now for the roll. Now, here's my current position. If I want to roll it to the 1 standard deviation line right here, I got to pay 53 cents. Right? I'd rather just close it. You know what I mean? Than take that kind of hit or pay to do it. I think I'm still in the ballpark. All right? Let's look at IB rank. I'll go to Thinkorswim. Here's my XLU. Okay, it's a daily chart here. I need it to come down a little bit. This is a very bullish sign. This is a very bullish sign. These are all very bullish signs. It doesn't bode well for me. Okay, I'll zoom in a little bit. Okay, my chart, I used to use this for day trading, but it helps me with directions once in a while. All right. OBV cross, that just means if it's green, more people are buying than selling. If it goes red, that means more people are selling than buying. As you can see, look what happens when this turns, look what happened right here. When it turned green, and this slow stochastic was above 50% in green, right here, as you can see, it started an upward trend. Doesn't bode well for me per se, but I'll just give you an example technically where it went. Where did it? Wow, this is thing. All right, here, look. OBV cross, it went green here. It was above 50%, and it's usually a bullish trend. See, the hardest part is when they both turn green at the same time. Let me zoom all the way out. Like, look at right here. So 50 turned green right here. It turned green right here, and look, it turned really bullish right here. And as you can see, as it went higher, it kind of teetered out, and right here was just cray, right? Bam. So the hard part for my XLU trade is volatility dropped already. It's already down to 23. So I don't know if volatility is going to drop much lower. It hopefully drops down to 12 and continue to drop. That'll help my position out. But I still need XLU to turn over and go down. So I'm hoping it tops out here and hopefully it kind of does, like, I'm looking for it to do something like right around here, to come back down towards this line, and hopefully this comes down right here. And I got a few days for September expiration for that to happen. I got 1 week, and then I got to either close it or roll it. All right, but that's basically it. This is why I'm not closing my tested side yet, or rolling my tested side. Hope that helps.